Could Trump's recent new tariff storm crash into the UK housing market? In the next 5 minutes, we'll uncover how this international turmoil could ripple through to your mortgage rates, your property's value, and your next big decision as a landlord or investor. First off, let's call this what it is: a global economic contest between China and America. America and China measuring who's got the bigger tariff policy. It's not just trade, it's an economic showdown. When the world's largest economy slaps new tariffs on imports, the ripple effects are everywhere. Even the International Monetary Fund is warning this could damage global investment and trade. And here in the UK, economists say the direct hit might shave off around 0.5% of our GDP. Not catastrophic, but far from being harmless. Tariffs fuel inflation. Materials get more expensive. Global supply chains slow down, and it gets worse. Some analysts predict US inflation could spike at 4.5%. Global interest rates expectations shift, and markets tumble. The odds of a US recession just jump significantly. But here's the twist. Trump's tariffs are still fresh, but if they escalate and trigger wider economic slowdown, it could actually lead to interest rate cuts here in the UK. Why? Because when global economies slow down, central banks often cut rates to encourage borrowing and investment. Lower interest rates mean cheaper mortgages, which boosts affordability and brings more buyers into the market. We're not there yet, but lenders are watching closely. If this turns into a prolonged trade war, expect banks to act quickly. We could see fixed mortgage rates fall, potentially dipping below 4%. And if borrowing gets cheaper, more people enter the market. And when demand outpaces supply, house prices start to climb. That's what's already been happening. Rightmove just reported the average asking price for UK homes hit a record £377,000 in April. That's a 1.4% jump in a single month. Now let's bring this back to landlords. If borrowing gets cheaper and demand continues rising, holding your property could be one of the best moves you make in 2025. Yet 15.6% of new listings this year came from landlords selling up, many feeling the pressure of taxes, regulation, and rising costs. But with nearly half saying they're staying put and some actively expanding, it's clear many see what's coming. If tariffs push rates down and supply remains high, rental demand will keep climbing, and so will yields. So the real question is, are you selling into short-term fear or holding for long-term gain? So, are Trump's tariffs going to sink the UK housing market or set off the next surge? Based on what we're seeing, one thing is clear. If they lead to rate cuts, it could ignite a buying boom. Falling mortgage rates and reduced competition open a door, but only for those ready to act fast. But for investors watching this closely, this might just be your window. If you've been sitting on cash waiting for the right moment to invest, this could be it. The combination of falling mortgage rates, rising rents, and reduced competition from hesitant landlords is a rare alignment, and Let Property is built to help you take advantage of it. We specialise in sourcing tenanted properties for investors who want a hands-off experience. From finding a deal to securing the purchase, we handle it all. Our clients buy fully let properties with income being generated from day one, and we make the entire process seamless, whether you're based in the UK or overseas. We created Let Property to be everything we wished existed when we started out, a service that helps investors build a portfolio of tenanted properties without the stress, uncertainty, or wasted time. So what do you think? Is this the calm before the storm or the start of a boom? Let us know in the comments. Hit like, subscribe, and we'll keep you updated on every shift in the market. Until then, stay smart, stay prepared, and keep your property investments working for you.